This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. OPEC has cut its forecasts for U.S. shale oil supply several times as factors including investor caution curb expansion, making the non-conventional supply less of a worry for the producer group in its decisions on oil policy. On Tuesday, OPEC trimmed its forecast for 2023 growth in U.S. tight oil, another term for shale, to 780,000 barrels per day. The group kept its 2022 forecast unchanged at 590,000 barrels of oil per day, having steadily cut the figure from 880,000 barrels of oil per day in July. U.S. shale oil drillers over the last 2 decades helped to turn the United States into the world's largest producer. But the gains in output are slowing and executives warn of future declines.
Global coal consumption is set to rise to an all-time high in 2022 and remain at similar levels in the next few years if stronger efforts are not made to move to a low-carbon economy, a report by the International Energy Agency, IEA, said on Friday. High gas prices following Russia's invasion of Ukraine and consequent disruptions to supply have led some countries to turn to relatively cheaper coal this year. Heat waves and droughts in some regions have also driven up electricity demand and reduced hydropower, while nuclear generation has also been very weak, especially in Europe, where France had to shut down nuclear reactors for maintenance.
Moving on to the top news in the energy sector.
The U.S. Energy Department said on Friday it will begin buying back oil for the Strategic Petroleum Reserve, or SPR, the first purchase since this year's record 180 million barrel release from the stockpile. The department will buy up to 3 million barrels for delivery in February, a senior official told reporters. President Joe Biden announced the $180 million sale in late March to combat surging gasoline prices that boosted inflation after the February invasion of Ukraine by Russia, the world's largest exporter of fossil fuels.
Oil fell by more than $2 per barrel on Friday, swept up in a wider rout in global equities on fears of a looming recession, after central banks across Europe and North America signaled they will continue to battle inflation aggressively. Brent crude futures settled at $79.04 per barrel, down $2.17 or 2.4%, while West Texas Intermediate futures fell by $1.82 or 2.4% to settle at $74.29 per barrel. The U.S. Federal Reserve indicated it will raise interest rates further next year, even as the economy slips toward a possible recession. On Thursday, the Bank of England and the European Central Bank also raised interest rates to fight inflation.
Next, we have the top news in metal markets.
China Mineral Resources Group, CMRG, a new state-owned agency, is set to be the world's biggest iron ore buyer as soon as next year, when it will start buying for about 20 of the largest Chinese steelmakers, Bloomberg News reported. CMRG was set up this year to buy raw materials for the country's giant domestic steel industry, as Beijing steps up efforts to increase control over the natural resources needed to feed its economy. China typically buys about 2/3 of the world market's iron ore.
Copper prices crept lower on Friday due to ongoing worries that a global recession and rising COVID-19 cases in China would depress economic growth and demand for metals. 3-month copper on the London Metal Exchange slipped 0.2% to $8,278 a ton by 1700 GMT, after touching the highest in more than 5 months at $8,600 on Monday. It has declined about 3% so far this week. China's COVID problems are still a headwind for industrial metals prices, said Edward Gardner, commodities economist at Capital Economics. We will now look at the top news in the agricultural. U.S. corn and wheat futures dipped on Friday, with concerns about a weakening global economy deterring traders from extending gains made earlier this week. Fund managers continue to interpret their supply and demand fundamentals through a lens colored by recession fears. Arlen Suderman, chief commodities economist at brokerage StoneX, said in a note. Sharp declines in equity markets and the dollar's strength added to the risk-off mood, traders said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.